Okay, guys, today we are going to cover Signet. We already looked at this specific company probably in March, but it was pretty quick glance because we discussed another company, Course, which actually moved quite a lot since that time. And recently, Signet collapsed in price. It went from 60 something dollars and went to nearly $52 right now. And I know that some of you guys were working with this specific company, and I've got a question from questions from few people what to do, and is it some kind of problem that we have to stay away from the company, or is it a bargain right now and we have to jump on the board and buy it? So, and it's always important to analyze the company after a situation like that, because I presume you understand that it might represent great opportunities. But again, guys, disclaimer is always remember that masterclass, the main purpose is educational, and if you decide to trade the share, it will be your own decision. You have to understand that, because you put your own money, right? You worked hard for this money, and I presume it's very important to make your own decision when you're doing something like that. Put pluses that you understand and accept disclaimer, guys. Okay, great. So our plan for today, as always, we're going to look at current market situation, what is happening with indexes, what can we expect, and generally, how can it affect your trading decision. Then we are going to analyze Signet Jewelers fundamentally, then technically, and then we are going to develop possible investing or trading strategies with a specific security. And then if you have any questions, we'll cover that, and then some news from our company. Okay, guys, let's start. First of all, Dow Jones. We can see last month in November when we discussed it, it's broke through the long-term, like this line. It was a long-term trend. It was a resistance line of the trend which lasted from 2008, and we can see that in September it broke through, so it's kind of speeded up, so it's become faster, it's going up, and you can see that it even didn't test the same level and continued to rise up. And last week it was a maximum again, and now it reaches back to the same level. Pretty possible that it can break through, but if for whatever reason, and one reason could be tomorrow, because I presume FRS, they're announcing their decision about interest rates, and a lot of analysts, they believe that they're going to increase interest rates tomorrow. So it might affect the market might go down. But even if it goes to 23,000, which is in this specific trend, it's about 1.3 thousand points. It's like around 5% drop. It's quite a lot for the market, but you have to understand that since last November, market moved a lot, and it's keep going up and up and up. And this situation cannot continue like that forever. So sooner or later, market has to pull back. Okay, and remember that market is an emotional place. When it starts dropping down and breaks through this stuff, a lot of people will be exiting, and because they would fear 2008, 2011. So you have to be prepared. That's why you need to be really careful when you're choosing companies which you're allocating money to. Okay, that's the important part. And we'll compare. Now, if you look at PE ratio of Dow Jones, it's around 25, plus minus. Like when I checked it last month, it was about 24.6, something like that. So now it can be more, because after that, it's already moved up quite a lot. And you can see that all indicators, they're in overbought situation, but it was for quite a while already, and market is still going up. Okay, economically, everything is great right now, so nothing really major is going on, which can affect the market pullback. So we can expect that, but we never know. Okay, S&P 500, similar situation. It's at a major resistance right now. That's resistance from 2008-9. So we can see it just at the top of it. So if it pulls back, it easily can go to around 2,500, which is about 160 points. So which is more than 5%. So that would be still in uptrend. Okay, so we can expect it's quite easily. Now, if we look at Nasdaq broke through that long-term trend quite a while ago already, so it's kind of moving ahead of Dow Jones and S&P 500, and we can see that last week it's also made it maximum, and at the moment it's kind of approaching this maximum again. So we don't know if it's going to break through. It's probably go until that resistance level and then might continue. If it stays here, we might see some kind of turnaround, can go back to 6,600, and it will be still an uptrend. Okay, that's about indexes. And if we look at volatility index, VIX, so that's what we can see at the moment at support. And remember that when there's a specific index at support in this area, we usually opening short position. So we are trying to buy puts or kind of playing downside of the market, okay? Because that's where the market is high. And when the VIX is high, somewhere here, okay, we are trying to open long positions. And the higher the VIX, the better for us. It means that the market is lower. Okay, so at the moment, remember that part. It's index of volatility, or Jonas, it's sometimes people call it index of fear. And if you place Dow Jones index right here on the top of it, you will see that they usually move in opposite directions. So when the market, Dow Jones or S&P 500 may move up, volatility index moves down. It's kind of the measure of fear. That's what I say. When this index is high, it means that fear is high in the market. So people are afraid, and it means that they're selling off securities, and usually indexes are low at this particular moment. When VIX is low, it means fear is low, and usually it means that the markets are high, everyone is buying. So that's what it tells, okay, about this. You cannot buy it itself. You can trade futures or options on VIX, but you cannot trade VIX itself. So you cannot put $9.34 and buy it. You can't do that. Otherwise, it would be perfect opportunity. It's so great ways to make money here. Okay, just for trading purpose. But again, remember that, because at the moment of support, it means that usually we stay away from the market. We don't buy right now, okay, shares. You try to open all your positions right here, regardless if your shares, it's fantastic opportunity very often when the market pulls back, and we can see that every index shows us that it can happen, okay, at least like 3-4%. So that's where would be the best opportunity to enter, okay, even if it is something like small, like here, you know, so this drop, that would be better entry point than here, okay. Do you guys understand that? Can you put pluses that it's all clear and we can move forward? Okay, great. So tomorrow would be the announcement about interest rates, so it might affect the index, so volatility might go up, the prices of indexes can go down, so it can present the opportunity for you to enter position.